The Kadena family, I know you're out there. I know you're having a pretty shitty time at the moment, but we were looking at this pattern. We were expecting something to happen. One of two things were going to happen on this: a break to the upside or a break to the downside. It doesn't get as easy as that, and that's why we don't take things in the middle of these patterns. We wanted a break to the upside. We got a break to the downside. That was the most probable move. Is price likely to react from where we are now? Where's the next sticking point? More importantly, let me know, did you manage to get Kadena at cheaper prices because of this downside break? Did you bring your average down? We've got lots to talk about. Let's dive in. Take a look at the charts. We're going to look at the charts together. We're going to analyze this and we're going to understand exactly what levels that I'm interested in, what levels are good levels of strong support. Remember, I'm a support buyer, not a resistance buyer. We've had this move. We were analyzing this move. We wanted a break to the upside. We got a break to the downside. So as far as the position's concerned, I'm not in this yet. I'm not in this move yet. Are we holding strong support? That's the question that we're going to ask now. So first and foremost, let's stick a Fibonacci on there, see if any levels are sticking. So we'll put our Fib retracement on there. This is the swing low, all the way from the swing low to the swing high. And then we're looking to find out if we've got any sticking points. Remember, we were trading in this bearish pennant. This bearish pennant was a higher probability of a move to the downside. We might have wanted to move to the upside. There's a higher probability of a move to the downside. So that was the 786 retracement level. What's the next level? It's the 886 down here. So what we're going to do is we're going to build in a zone because this is going to be our last strong support. So just build that in there. Bottom of the range sat at 60 cents. Top of the range sat at 64 cents. Right, okay, so where am I interested? This is where I'm interested, guys. And this is the reason why I'm interested. We're going to put in another band here. This is going to be our major resistance band that we need to overcome. Once we've overcome this, then you're likely to start seeing bullish moves, higher lows and higher highs. Until this has happened, I'm not expecting that to happen. So what I'm going to do is, you can see this wick here. That was a strong support wick back in this bullish move. It held support, and then price action hovered around there. We talk about gaps, we talk about build up a price action. Once you've got a build up a price action, that's likely to act as support and it's likely to act as resistance, depending on whether price action is trading above, depending on price action trading below. We're trading below this now, so this is going to be our resistance point, and this coincides with our 61.8 retracement level from its previous high. That is sat at $1, $1.03. So once price action breaks above this the 0.618 retracement and holds this as support, that's going to be confirmation that we're likely to start carry on moves to the upside, and then you can start the bull run. If this is the time of the bull run, we need to know exactly where it is that we're interested, and above this 618 is where I'm really interested. So from a laddering in perspective, it's all right to get a little amount here on these strong support. It's all right to get a little bit if it comes back down, but just remember, it's averaging your position out. If you had $100 and you put $25 in here, price come back down, you've got $25 in here. So you've got an average of around 63 cents. You've got an average of 63 cents. What happens if price just reverses and goes back up? You've only got 50% of your capital in there. Are you interested? No, you keep your 50% of your capital and then you look for opportunities elsewhere. This is not the only token within crypto. You need to prepare yourselves for making sure that you haven't got your entry in place in the right time. If you've got $100 and you're looking to ladder your position in and you only get $50, are you going to be happy with $50 at a lower position? Or would you risk adding the $50 in at a higher position and bringing your average up rather than bringing your average down? So you've got to look at it from two types of perspective. The investment perspective, where it's all right to start laddering positions in at these lower levels because you're in it for the long term, you're in it for the next year to 18 months during the bull run. That's fine. From a trading perspective, I don't know that price is not going to continue lower. So we need to look for signals. And this is my first signal, is this 618. 618, which coincides with this previous area, this previous build-up of price action, which acted as support for such a long time. And then what happened? Once we flipped down below that, resistance. Build up of price actions are your friend. You can understand that that is going to be your support or that is going to be your resistance, depending on whether price is above or price is below. So It's a waiting game at the moment. It's all right laddering your position and at these strong support levels, but just make sure that you've got capital on the side to ensure that if we carry on going to the downside, you can bring your average down. So if you did like this video, guys, let me know what you want me to cover next. I've got a playlist full of Kadena. I'll leave this at the end of the video, and I'll see you in the next one.